Morning, everybody. It's the 28th of July. We are Signal Centre Talking Ball. I'm Joe Neighbour, and I'm joined by Steve O'Hare. Good morning, Steve.
Good morning.
How you doing?
All tickety-boo here.
Good.
Thank you.
More gold this morning.
Right. Tell me about it.
Swimming relay, 200 metre. Is it 200 metre or just a freestyle event? The relay team got a gold.
Right.
Yeah,
I
I
thought I
think we got a
saw
silver as well in something else.
Oh, right. Thought the Americans won that. Was that the 100-meter one? The Americans won the gold in.
Might have been.
Yeah, maybe. Nice one.
Yeah. Okay, let's get stuck into what's going on today then. So, the UK reported its highest number of COVID-19 deaths since March yesterday, which obviously isn't great, prompting the government to warn that the pandemic is not over yet, as we all know, despite a continued decline in confirmed cases. Still, the UK government is set to allow visitors from the US and the European Union to travel to England without needing to quarantine on arrival, provided they've been fully vaccinated. So, yeah, as long as they've been fully vaccinated, get yourselves over here.
Lovely. Very nice. Well, welcome.
Yeah, welcome. So yeah, not loads going on in terms of the news. I've really not much across it this morning, but yeah, it doesn't look to be a whole lot going on. Obviously, we did have these tech numbers out yesterday. It doesn't appear to have been any bump in the road on the equity side of things as a result of that. So I think we can just get stuck straight into the charts today, Steve. Where would
Lovely.
you like to start?
Just has Apple come out yet? When is theirs?
Paul is.
Has it already been out?
Yeah, it was yesterday. Google, Apple, and Microsoft yesterday.
Okay. And how was that? How did the price react to that? Well, I can actually have a look, can't I?
Yeah, you can. Yeah. What I can look at is the all market on IG, all sessions down 2%.
Down 2%.
Is what they're showing at the moment pre-market.
Okay. And yesterday, what was the reaction? Was the reaction higher or?
Looks like it came off on the back of the numbers, but certainly not anything huge.
No, okay, all right. Is it just something I sort of noticed in the Acuity platform the other week? That it was there was 100% chance of Apple moving higher in the next 9 days,
Right.
and that was about 9 days ago. But I wondered if the price hadn't actually moved higher in that 9 days, and if there was any technical reason to back it up also.
No, I don't think so from a technical point of view. Well, maybe, it's certainly making lower high. I know you got the oil chart on there.
Yeah. I'll go with oil anyway. We'll stop waffling about Apple. Maybe have a little look at that while you're talking about FX.
Okay.
Yeah. So I've done a video on oil and natural gas this morning. That'll be you'll be able to see that on the YouTube channel and other places. But yeah, so really a bit sort of two-way action, really, a bit of indecision now in oil. So we've got the OPEC nations who wanted to basically raise production, which would have a negative impact on the price. And also we got the concerns about the global economy stalling in opening up. So the demand's been lower. So again, negative. And China obviously is getting smashed on the indice front, so that's having a bit of a sort of like a wake up call. Yet the sort of prices seem to remain quite elevated. So, and I'm just looking at the sort of like the shorter term price action really, and well, actually, if we go to the daily, we can see this sort of indecision really around here. The reaction lower did stall at some sort of like previous swing high levels, and obviously stalled at this potential upward trending support line. So this trend line goes all the way back to, I think it's April last year, and also was connected to 2nd of November 2020. So last year, sort of 6 months after we made that low in the pandemic break, then we made a further low, and so that line was just drawn in there, and it hit it, nailed it, absolutely nailed it, and formed a morning doji star formation, which is obviously a positive for price action. And we've moved higher, just stalling now, So it's really decision time as to whether we're going to retest this downward trending resistance line or take out the highs. A lot of people talking about $100 oil by the end of the year. Jury's out on that for me, really. Still a long way to go before we see that. Similar sort of price action in Brent crude oil. We had a sell-off reaction from the little fly getting in the way, trying to get on camera and stealing my limelight. And reaction higher, not quite a Morningstar doji, but a Morningstar type formation. Natural gas was interesting. After breaking out of this triangle formation, which I highlighted, retesting and extending higher. So we got this impulsive move higher. And we've stalled just in front of the 78.6 Fibonacci retracement level. High was 415 or 416, we could call it. Formed a shooting star on that on the Monday. Bearish engulfing yesterday, which was a little bit of a surprise after sort of like looking so healthy. But we're back to the real supportive levels. The 380 offered a top on 3 occasions before breaking, so that'll be pivotal there. And 385 is the sort of like that range between 380 385, I think, is going to be prominent and supportive. If we manage to break that, the next support would be coming in around about 350. And then the 343, which was the spike high in October 2020. So that's it on natural gas. Gold, well, actually, looking at silver had felt a bit sick yesterday, felt a bit poorly. Let's look at the 4-hour chart. It sold off more aggressively and stayed lower than gold. So maybe that's an indication that, you know, we are in for a little bit of a corrective move lower in the precious metals. And yeah, so silver may be the one to take the lead on this and go short of, maybe even a gun to head. Whereas gold, let's get rid of that. I've highlighted this potential head and shoulders formation. Bit of a complex formation. There's like 2 left shoulders, there's a couple of right shoulders. So still looking at this, for me 1790 is the key to this. So if we can break below 1790 and close below there, then I think we have another we'll quickly have another test of the 1750 level. The target for me is down around about 1670 1680 before I feel buyers will come back in. So I'm still slightly bearish on gold after the failure to sort of like push higher than 1835. On the indice front, what we got, we had a bit of a recovery yesterday, positive price action in this and cryptocurrency Bitcoin, which slammed me in the gun to head challenge. So we're above the Ichimoku cloud on the 4-hour chart on FTSE, so that's looking a bit positive. On the DAX, we had a really nice move higher last week, and we had a correction lower yesterday, got down to 15,420 before reacting nicely higher. So again, I still feel that there's a bit of a story to be said for these, but it has been supported by the Ichimoku cloud, so I'd be a bit wary of setting shorts and looking for too much downside. As we know, the US continues to be well, I mean, it's still being capped, I suppose, on the Dow. The Nasdaq is a bit of a different story, but it did have a bigger sell-off yesterday than anything else on the indice front when we're talking about the US. What's the all-time high in here now? Feels like there, 15,142. But this really sort of decent sell-off, we saw a couple of percent downward move in that candle, which was pretty tasty, but recovered to sort of 50% of that move by the end of the, well, by now. So yeah, it's really sort of, we've got previous highs around about where we're trading now. So again, a bit of a challenge for the bulls to get above here before the US opens up. S&P is hanging around the 4,400 level, has been up to 4,425, but again, that had an aggressive sell-off yesterday along with the Nasdaq, that sort of tech sector side of things. China 50 also had a little bit of a recovery. I'd sort of like sent this to the the grave really, but it seems to, let's get a daily chart up to see where it's reacted from. Yeah, it's reacted really nicely from this. You can see the previous high. Once this was broken, this acted as support, so it's a pivotal level. And yesterday it broke below it, this 14,677, which was the measured move target, as we highlighted on the weekly chart. So measured move target, absolutely nailed it before a really nice correction higher. So technically worked pretty well. What to do now? I'll still be bearish of this after this break until it gets back above the 16,400, and that seems like an awful long way off 1,800 points. So I wouldn't hold out too much hope for that, but obviously potential for a little bit of a more meaningful correction higher before the sellers come in again. We're still in this descending triangle formation. This feels to me like it is. We are going to fail in this upward move, and the triangle will break to the downside. 26,975, so around about 27,000 is the key level to watch there. Close below there, and we're in trouble. Houston, we have a problem. The Hang Seng had a bit of a correction higher, and the Aussie 200 sits quite healthily up there, while the commodity sector is still looking okay. Quick look at cryptos. Bitcoin, what are you doing to me? So we've got this level, 41,000 for me is the resistance, for 40,904 I've got here. 1, 2, 3 points, it's a decent resistance. A break above here and a close above here would be pretty positive in my eyes for Bitcoin. Whether it can manage it, I'll let the participants decide on that, but as you can see, this is what we've been held in and been trading in since 19th of May, this range here. So even a break above 40,900, it still has to challenge the 43,000 level, but I think momentum would naturally take that up to there. And for me, also the level to watch above, not up there, baby, up here, around about 47,000 would also be another solid resistance level to get through. So yeah, it sets up nicely for a potential, is he going to say it, potential double top? I'm going to say that because we've got a, because I'm negative and I like to be negative, got the two highs here, potentially even a third high here. And then you've got the neckline, which the neckline for this is these two tops is here, but I'd rather think about this neckline here. 36,386, that's the level we've got to get below for the bear mood to continue. Now, if we look at the 4-hour chart, one thing I do want to highlight was this trend line that we had in place. It was a potential trend line, these 2 points. And once it broke above there, it really was a clean break. Never really looked back after that. That was the 23rd. That was Friday night at 9 o'clock. Once it broke above there, then it was away to the races. So that was, again, a decent key level, although it was just a potential downward trending resistance line because it was only 2 points. You really needed that third point, maybe a reaction lower, and that would have been a bit more powerful. But look at the reaction. It's been great. Positive. I'll let you take over with FX.
Do you want to have a quick look at Ripple? Aaron, one of our viewers, has mentioned it's had a bit of a spike in the last hour or so, as you can see.
We like that, don't we? We like that, especially if we can get a close above 73.30 in this 4-hour time frame. So the 4-hour time frame on this chart takes us from 9 o'clock to 1 o'clock. So it's got to hold on for a little while now. We've only just started it. Yeah, but if we can get a close above this resistance line here, for me, that's pretty decent potential. Now, where are the resistance levels from there? So we've got a 50% retracement of this. This was a sort of impulsive move lower. We've got a correction higher, and this was the top of the correction higher. So then again, this turns into a little bit of an impulsive move. So then we look at the Fibonacci retracement levels to see where the potential pullback is, and we get some great ones coming in at 50%. Would be great, because that would line up with the congestion we saw here, or the support we saw here. Once that support was broken, that turned into decent resistance. So 80,626. Don't know how you say it in Ripple speak, but I suppose that's 80 cents. But yeah, so it's potential for another sort of like 7 cents on the upside for that. 61.8 is always a really sort of great technical recovery. That's comes in at 87.60, and for me that would be a decent recovery. Always when we have a big spike like this, when there's, you know, if you have a sort of like multiple moves and it turns into a sort of a sustained move lower, they're always the ones that you can that seem to be more powerful when it comes to technical. When you have a big spike like this, a big spike on volume, quite illiquid, then you've got to be a little bit more cautious. It could be like a new spike and some sort of sentiment, some sort of big whale, you know, sucking Ripple in and losing something else. But yeah, you've got to sort of like, initially, from a technical perspective, what do you do? I mean, if you're sort of like a bit of a bear like me, I'd think, oh, this is, I'd wait for the candle to close on the 4-hour chart. We'll even look at the hourly chart, turn this into an hourly chart, and what do we see? So I'd wait for this to close on the hourly chart. If it closes below the 73.30, then it's a nice one to fade, because your stop would have to be above 74.50. So I know it's quite tight, but that would be, from a technical perspective, not a bad risk reward, because your reward is all the way down here, your risk is only here. On the other side, if it does close above here at 10 o'clock on the hourly chart, then that's positive. And you can also do the same sort of thing. You can get long there and have quite a tight stop on a break back below that level. So I suppose that's it.
Thanks, Steve. Okay, so on to FX. Not huge amounts to speak about, but dollar index looks quite interesting today, because, as I've been mentioning, this channel that it's been trading in has had the potential to obviously break in either direction. And yesterday we saw a close outside of it to the downside. So what that may mean is that we see some sort of consolidation or corrective move to the downside in the short term, which I guess, you know, prolongs the fact that we're not quite going to get this double bottom completion which we need in order to complete to get above 93.43. So we may see a little bit more sideways price action in the short term as a result of this break. In terms of where the downside could be capped, potentially as low as 91.43, where we've got some highs back in May, which may cap the move, and also below that we've got a level down at 90.63. So potential for a bit of a corrective move, maybe, you know, taking a bit of froth off the top, rebuilding before another assault at this move to try and break above that 93.43 level. So obviously that's having an impact on euro dollar as well. I've been all eyes on this head and shoulders top pattern, which, you know, arguably you could have said completed here on around about the 20th of July. There wasn't anything impulsive. There wasn't any big breakdown on the neckline. So for me, that wasn't really a telltale sign that the top pattern has done enough to complete. And again, we've seen this sort of wedge pattern or consolidation pattern form and a bit of a break to the upside on that. It didn't happen on a closing basis yesterday, as you can see here by this candle. Let's just zoom in. So yesterday's candle, although bullish, didn't really close above it. And we're not really kicking on today. So maybe there is a chance that that's just a sort of a fake move and we will actually see a continuation lower. But for me, in order to complete this top pattern now, it needs to take out this red line of support that I've got at 117.04, which is the horizontal support level from these lows posted back in March. So if we can take that out, and if we do see any sort of impulsive move to the downside confirming that, then we have our top pattern in place and we can start looking for lower prices over the medium to long term on euro dollar. Looking at cable, the bounce has continued there. Further strength yesterday on the dollar weakness, but we are approaching this sort of downtrend resistance level and this previous swing high up here at 139.10. This could be a decent opportunity to fade it. Still think we've got a double top in place here, top one, top two. Then we saw a breakdown below the neckline of this on the 20th of July, but we have rallied back quite sharply. So a bit of a fake out move, but will this be an opportunity to fade it? From a risk reward perspective, this would be the ideal opportunity, I think, to think about getting short into this kind of level here. You've got a ready-made stop loss really just above the highs, but in terms of where you can target, we've got a measured move of the double top pattern, which comes in down here at 130.97. So from a risk reward perspective, if you can hold your nerve, we've got minimal risk here really of sort of 90 ticks. But in terms of the downside, we're looking for potentially 775 ticks on the downside over the medium term, that is. So don't expect anything to happen ultra short term on that. But that could give you a bit of bias of how to play this over the medium term. Maybe a case of just selling into rallies. So quite like the look of that today. I was back in dollar CAD yesterday, but despite us seeing weakness in the dollar index, we saw even more weakness in the Canadian dollar. So that actually held on yesterday, still holding support around about 125.26. Still got some trend support on offer as well. So for me, I still think there is potential upside on that, and obviously that will be helped by any dollar strength and continuation of Canadian weakness, which we have seen over the last few sessions. Looking at some of the Aussies, still fancy this lower Aussie yen. Yen continues to be quite strong at the moment. We've still got this big top pattern in place, and any rallies up to these kind of levels are being sold. Big bearish day yesterday, bit of a bounce today, but doesn't look like the bull's going to hold on. So I think further lower prices to be expected there. Aussie dollar, well, this has already completed the top pattern for me. It did so back here, really, in mid-June, and we've obviously seen this continuation lower. So a little bit of a bounce in the last few sessions, but looks to be rolling over again. Measured move target down here in the short term is 70.57, so expecting lower prices. So despite a little bit of weakness in dollar yesterday, we're seeing more weakness in some of these riskier currencies, and therefore you can continue to play some of these dollar markets on that basis. So that pretty much wraps it up on the currency side of things that I've been looking at. So we can have a quick look at the gun to the head trades from yesterday. Steve, you traded Bitcoin, is that right?
Yeah, I don't want to look.
No, so one our loss. I'll get that off the screen. There you go. So I bought dollar CAD, which was 17 ticks on side, 0.43R. So nothing spectacular, but they all help, I guess. So Steve, anything you fancy today?
Just let me think. Just having a little look at the apple. How's about those apples? Now, I've got
so just on Apple, I've got a bit here. So they were impressive numbers according to the consensus. They beat estimates on sales across all services, providing outperformance for revenues and earnings per share. However, the stock failed to capitalize on their numbers as investors sold up thanks to forecasts of chip shortages in Q4. So based on previous numbers are great. Looking forward, there are concerns.
Well, I was away in Whitby last week and there was no shortage of chips there, mate. I'll tell you that for nothing.
Hey.
So this was what I was looking at last week on the 23rd. I think this coincides with the 23rd, 5 days ago. 28 minus 5 is 23. We had a daily news sentiment is moving higher. You can see this little green chevron here, 146.80. The prices. Daily sentiment is moving higher, and in 100% of the last 10 occurrences, price has risen within 9 days. Well, price did in fact rise, but we've also got another one today. A 90%. I mean, these are quite high percentages. Obviously, this goes all the way down to 0%. So, we could, and if I do all, you can get all these different sort of like, these are all news sentiment based market alerts. So it's really, we're looking at the news, scanning 50 million documents a day, apparently. That's what I've been told. And then we're digesting them documents, working out what is positive news sentiment, what's negative, and Apple is looking pretty good even after you can see the sort of like the sentiment dropped lower, very aggressively lower. This is a daily. You can have hourly as well, and you can see the sentiment did drop lower, but it's come back, bounced back today. and it's saying 90% confident that we will see higher prices in the next 9 days. So 90% of the last 10 occurrences has risen within 9 days. So looking at the chart, what we're going to do with the chart, where has it gone? Stocks, Apple. How do you like those apples? So for me, obviously, we've broken above this previous swing high here, and it's been sitting nicely above there. We had this drop off 19th, 16th to the 19th over the weekend, and we've had this push higher. So really, to confirm this, I'd be looking at the 150 level as basically a break above there, and it's blue skies, new highs, isn't it? So we've had the reaction lower, pre-market open coming in at 145. So I think while we remain above this level here, 140, 167, I would like to buy a dip down here for the potential move up over the next couple of weeks. So obviously
this is guns to the head for 9 o'clock, but
yeah,
just in terms of price, I can give you a live price of $145 on IG all sessions.
yeah, cool.
So
cool, yeah.
obviously, people could argue it's not tradable at the moment, but there are ways, and IG are offering a price at the moment, and that's at 145.00. So if you're buying, Steve, that's the price we're giving you.
I hope you're not making money out of that plug, Joe.
No, maybe a bit of a spread attached to that, but so is that your gun to head? Were you buying Apple, or is that just?
No, I can't do that. I don't think it's going to happen today. Because but that was just I just wanted to
give people 2 for 1.
Yeah, well, I don't mind. I'm feeling generous after thinking about my fish and chips supper last week. So this is what I'm going to do, though. I'm going to sell gold. What? Shock, horror? No, and Steve O'Hare never sells gold. It must be collapsing. No, it's not. I'm just going to sort of like get short of gold at the 1800 level. I sort of don't like what I see on the silver side of things. I think gold is always like people ships gold back in a little bit quicker. So I am going to sell gold at well, it's done it at 1798.79, and we're going to have a 6 tick stop on it, 1804.7. That's too close even for me. What I'm doing, get it above 1805. 1805 always seems to sort of like hold on to them little noisy moves. Hopefully it'll hold on to this noisy move, and then I'm going to target a move down to, oh, where am I going with that? Yeah, 15 to 1 shot. You're mad.
What's the target?
The target is just in front of support, 1678. So 1678.79.
Wow.
15 to 1 shot. I mean, I could sort of like be a bit more sensible.
Why not, eh?
Why not be a bit more sensible? Make it a 10 to 1 shot. So my stop is at 1810. Like that a bit better. I always find that when it's trading around the 1800 level, gold, or a 00 level, it could be 1700, 1600, 1500, doesn't really matter. You tend to find that 1805 or 1705 and the 1810, 1710 levels do sort of act as like psychological resistances, etc. So yeah, I'm already offside. So what a bad idea that was. 10 to 1.
Good luck. I'm going to take a look at dollar CAD. So this was a drum I was beating yesterday. I've got a bit of a range on the charts here, lower blue line, upper blue line. I'm going to buy it because I think it's going to break out of this range and head higher. Current price is at 1.2590, targeting a move to 127.13 with a stop loss at 125.50. Ideally, my stop would be below the lower end of that range, but I've got a gun to my head, so this is what I'm going for, looking for a 2.84R return on that. Is that right? No, 3R, looking for that today. That's my trade of the day.
Excellent. Do you want to become famous, Joe?
No. What? Why?
Well, AB Joseph 298 is asking us, do we want to become famous? Buy followers, primes, and big viewers.
Just advertised him now.
Yeah, I know.
Get him off the screen. No.
No thanks. No, I don't want to become famous. You'll want me to star in Love Island next. What are you doing?
Oh God, don't talk about that. Okay, yesterday's numbers as well. So we had Apple, we also had Microsoft and Alphabet. They all managed to beat on both revenues and earnings, but obviously they are concerned about these chip shortages. Later today, we've got numbers from Facebook, PayPal, Pfizer, Ford, Boeing, and McDonald's. But I think the biggest event of the day will be the Federal Reserve rate decision, with Chair Jerome Powell and his colleagues meeting at the US to talk about, obviously, tapering, talk about inflation, talk about the rise of the Delta virus variant. So plenty going on. It may mean that we see some choppy price action ahead of that. The rate decision's at 7 p.m. and then obviously there'll be the press conference afterwards. So we may have to wait a little while for some volatility in markets today. Ahead of that, we do actually have the Canadian CPI number, which is due out at 1:30, and we also have US EIA crude inventory numbers at 3:30. So a little bit to get our teeth into, but of course all eyes will be on the FOMC later today. So be careful if you're trading ahead of that. Be aware that that is a large event which could create volatility. Steve, we can wrap it up there. We'll be back tomorrow. And until then, everybody, trade safe.
Cheers.
Bye bye.